thumbnail today, non-farm payroll big miss. I'd say this is two pretty severe months of disappointment in the non-farm side. Reality is it's not a firing problem, it's a hiring problem. The US just isn't hiring anybody. Um, so we have jobs in healthcare. We can look through the numbers, but basically the forecast for non-farm was in the 70s. It came in the 20s. Revision from like 73 back to 76 or 79. Unemployment rate ticked up from 4.2 to 4.3. Market actually was pushing higher into futures all morning, ended up gapping to all-time highs and faded pretty hard off the day. We had a pretty big swing in the markets, over 1% from high to low today. I am happy to announce I just eclipsed the year-to-date highs by a decent chunk. I was up to about 460 today, and it's faded back to about 450, but my previous all-time high was 437. So a nice little jump in the portfolio today, which I'm happy with. And that's despite the market still showing us some indecision near these tops. I still think this is a bit of a rising wedge type look, especially with today's candle. We just keep making highs, pulling back, making highs, pulling back, making highs, pulling back, making highs. With today's price action, we could still keep this silly little train going for a little bit longer. But if this thing rolls over, a rising wedge is a pretty good pattern. So if we get some trades out in the open space, if we get some price action out here, if we break this low, which is around 63.60, okay, that low is 63.60. This previous low is 63.40, 43. So 63.60, 63.43. If price takes out those lows, I guess I will just draw a line. I don't even want to draw that trend line. Okay, we just have to take out these lows. This is what I'm thinking. There, a little bit of a rising wedge. Today, the market, kind of put a little bit of a top on. We will see how this price action plays out in the near term. Okay, if this is a bear flag environment, look at this from the shorter time frame. If all we're doing today is smashing lower, setting up for a consolidation, if this is a bear flag, follow throughs next week, right? If we push lower next week, then make sure if this low breaks, we are likely, making our way lower. If we sweep this low from this week, in fact, it's interesting. If you look at where the week started, this was last week's close, and we are barely above that. So for the week, it's essentially a flat candle, right? We're up just a tiny little bit for the week. So thought that was kind of interesting. Consider where we started. We started way down here. So the body of the candle looks decent, but from week to week, it's still nothing impressive. Okay, so daily candle, some chop, weekly candle, some indecision. We could go back here 1, 2, 3, 4. I'd say for 5 weeks, we really haven't had much traction either way. 5 weeks, we're getting some price action like so, right? So slightly higher highs, but also some equal lows. We will see what this ultimately looks like. If it ends up breaking these lows, there's certainly room to come back. So let me see if I need to adjust a fib. I'll adjust a fib just a little bit. Previous high at 61.45. Look at some fib levels. Let's go daily chart. 50 period moving average, all the things I've talked about for the last couple of weeks. Traders with me in my daily profit plan. We have some levels that are looking pretty good. Trades going into next week on Monday, the 25. This one took profit. So this is done. I closed out for 90 cents out of a max $1. So that's a pretty good winner there. I do have another one at 30 and 35. So I've got a 30 for a butterfly spread. And then I have a 50 for a butterfly spread. And I have a 35 for butterfly spread. So let me go ahead and just copy and paste. Let's go to 65.30. That's a trade for Monday's expiration. That's right back up towards the highs. I would like to think that we're not going to get there by Monday. Mechanically and looking at the option chain, that should be the case if we go to the 8th. 65.30 right now is trading for about an 8 delta. So that's about a 92% chance that it stays out of the money, and this trade is going to be another $1 credit winner on Monday. Time will tell. Obviously, I'll adjust it on Monday. If we go lower on Monday, then it's just easier to have these things hit for profit. So net, ended up making some money this week, but I gave a lot of it back on Thursday. I was a little miffed on Thursday with the market doing what it did, but I wasn't terribly surprised to see the market actually respond to some of these, call levels and resistance levels just finally holding out. We hit an all-time high and we faded pretty hard. If this is a structure move or something impulsive, if this breaks here, watch out for some follow through. That would be a bear flag going after that low. Is that the case? I don't know. I mean, I still think the market is going to put in some type of near term top. We're going to pull back in some capacity. I think having weaker jobs numbers makes things a little bit more gloomy. We obviously have inflation that's going to print next week. I don't know if there's a forecast on it right now. We can take a look at the calendar. So next week, I think it's going to be Tuesday through Thursday. Let's check out. So Tuesday at 8:30. Nope, nothing for the U.S. Should be Wednesday, Thursday. So Wednesday is going to be this is going to be PPI news on Wednesday. Year over year at 3.7. That's core, and headline is 3.3. So we'll see what that print is on Wednesday next week. And then Thursday is the CPI data. Year over year previous was 3.1, and that's core CPI 3.1, and then headline is 2.7. So the two big numbers next week to watch, I think, the big one that everyone's going to be paying attention to will be this. We had a really hot producer price index, and we'll see if that changes. But I'd say your headline inflation, headline year over year and core year over year will be the two numbers to watch. Are we going to see these print higher? Okay. Again, just in the near term, as far as, oh my gosh, inflation is higher. Oh my gosh, inflation is stickier. Well, that's not a surprise. We throw a little friction in the global economy with tariffs. We still don't know the goods and bads of them. Companies obviously aren't going to eat all the tariffs. They're going to try to find a way to pass it on. Consumers will ultimately decide whether they want to pay for those tariffs or added expenses or not. So from producers to wholesalers, distributors to businesses to the consumer, prices are likely going to be sticky, if not going higher. Okay. So we'll see what happens. But that's what's coming next week. And then after that, it's all about the Fed. I thought this was interesting today, just based on the print. 90+% chance that we have a 25 basis points cut in September. But what did pop up on the radar today is now we're starting to see, there could be a 50 basis points cut. It's still a low probability, but it's on the calendar nonetheless. Anything that adjusts 1, 2, 3, 4, 5, 6 cuts going into next year. So 1, 2, 3. I mean, this is a big jump in October, by the way. So it looks like the path for the Fed is going to be cut in September by 25 basis points, cut in October by 25 basis points, cut in December by 25 basis points, and then make another cut through March, April, and then another one over the summer, and then another one into Q4, either September, October, December. But that would be 6, most likely at 1.25, or I'm sorry, at 25 basis points. So at 0.25%. So 6 cuts at 0.25%, which puts us to 1.5% lower on the short-term yields. So that's what the Fed is controlling. That's what the Fed can control. That's what the Fed is cutting. What happens to the long end of the curve? That's what we're about to find out. Okay. All right. Price today back into the 80s, all the way up to as high as 65.30. Hopefully the market doesn't make just like a big late day rip. I really hope that it stays kind of right where it is. 85 would be great. Closing down at 75 or 70 would be even better. I'm just speaking purely statistics and probabilities for the trades that we have running for Monday. So these trades are all Monday expirations. I'd like to have 4 more winners. So 100, 100, 100, and 100. Actually, it's one of them's $200 because I put 2 contracts in. So there'd be another $500 of profit. Okay. So we'll see what price action does. But all in all, interesting week. Gap lower. Market spent literally the entire week fighting back, got to all-time highs, and then just a big dump today. So let's see if there's a top. Okay. Do we hit all-time highs next week? Does CPI take us to all-time highs again? I don't know. I wouldn't pass anything. I wouldn't put it past anything to see the market just keep grinding. And then it's all about the Fed, and probably the Fed puts the top in the market. But I think we just play the game. Let's see what next week gives us. Higher inflation, does it make things more worrisome? We have this ridiculous bar count on the 50-period moving average. I think a pullback would be great. I'm still interested in buying dips, but I'm not just partying at these dips. This is a very realistic dip. I would much rather be positioning for dips in here if I want to establish longs again. Okay. So my waterfall income class will be able to, adjust our margin for error. That's a strategy too that we like to deploy. My double ups, looking for opportunities in here as well. Okay. So I'm just going to be waiting for price action there. And obviously daily profit play we'll do our best to kind of, look at the market day to day. Okay. Yeah, we'll see, Janelle. I don't know. I think it's just the day. High, low. Here's one way to think about it. I mean, if this is true price action, here's what I would expect. And this is very short-term stuff, but high, low, market pulls back here, finds a Gartley pattern, and then finds a chance to sell again. That just based on how strong that sell wave was. Um, I mean, that was only down like 1%. Again, it's like I'm not that excited about buying little tiny freaking 1.3% dips. I'm just not. Give me something at 5%. Give me something meatier. Give me something where the VIX can spike up and actually give somebody a scare. 19s were great. I actually sold a bunch of premium up here when the VIX was at 19. I sold SPY, I sold Qs, I sold DIA, I sold Russell. It's like I'm participating. I just want some higher VIX. I mean, the VIX went up to 16.8. It's all the way back down to 15 today. So we'll see. It's a really interesting market. It just doesn't seem to care. And I said this morning, it doesn't seem to care until it does. And I told traders that if the market's going to care, price action is going to tell us when it cares. Because if price action cares, then we're going to be taken out a low. There's the talk of the correction that we've been anticipating for a while. And sometimes it's not fun. You anticipate, you don't get rewarded for it. I'm just trying to be a little bit cautious. I'm not super bullish. I've melted up to new highs in the portfolio for the last couple of months, despite despite this choppiness and barely grinding higher. I've had highs in the 400s. It was like 400, then 415, then 427, then 436, and now 450 today. I was up to 460 this morning, so I'm marking that as my new high for the year. So I mean, that's where I'm at, and this is not with gangbuster participation. I'm crazy aggressive. I've got plenty of cash. I am about 50% cash right now. So a lot of option selling, a lot of ratio spreads, a lot of hedging, and just kind of hanging out, making sure that I can absorb the risk. Okay. If it does claw back, will that be a hanging man? I don't know. We'll have to look at the candle. I mean, if it claws back that much today, I don't think it's going to. I think for a Friday, I wouldn't be surprised if it just kind of lulls to sleep here for the next 30 minutes and maybe we're kind of stuck here around like 80. If it gets up to like 90, I'd say if it gets up to 6,500 again, I'm going to be a little annoyed going into Monday. I think right now I'm pretty confident that my Monday trades are all going to work out pretty nicely. But like I said, I'll do a measurement here. So this was a low of 43 and a high of 79. So 43.79, that's 36 points. So we go from low 57. So 57 and 36 would be, is that back to 90? 93. So if we come back to, 93 today, 93 today would be symmetry. High, low, rally, and then see if it turns from there. One thing I'm watching for the rest of the day is how this behaves for today and I'll go into next week. Because if we roll over and we break this low, we're probably going lower. All right. So, and it should happen. I mean, we need to see a pullback. This market's ridiculous. It's overbought, oversold on multiple time frames. Some of my favorite, most trustworthy indicators are aligning like crazy. Daily, weeklies on the S&P, on the NASDAQ, on the Russell, on the Dow. I don't know how we haven't pulled back yet. It just refuses to do it. And, September is the perfect time to do it with all the crap that's lining up. Today was non-farm payroll. Next week is inflation. The week after is the Fed. It's a weakness window. It's the only time, I think I shared this week. It's the only in the 10-year average of the market, or like the last almost 40-year average of the market. I'm going to save these notes, by the way. I took some good notes today. I'm going to post these in my Telegram channel. We had a nice so in my daily profit plan, we had a nice little segment today for kind of the anatomy of a trade or trading strategy breakdown, and we ended up talking through butterfly spreads in pretty good detail. I blocked off about an hour and some, like an hour and 10 today. So we ran through butterfly spreads. This is long call butterfly spreads. We ran through long put butterfly spreads. We also ran through broken wing butterflies. So if you'd like to learn more about that, this is essentially a free masterclass that I gave for fun, just with my daily profit plan room. And I'll save these notes if you'd like them, and I will post them in my Telegram. And feel free to, enjoy those and watch today's session. So that YouTube session should be on financial. It's Financial Wars. So YouTube.com/Financial Wars. It should be posted under my daily profit playlist. Okay. All right. So I will save these really quickly. I'm just going to post now before I forget. I don't want to snag it to go away. So I'm going to go all time highs. And we have, let's go daily profit plan, anatomy of a trade lesson today. Great 1 hour plus discussion on butterfly spreads. So butterfly call spread, butterfly put spread, and also the broken wing butterfly call spread and broken wing butterfly put spread. This session is available. Just typing this out for Telegram. This session available on youtube.com/Financial Wars under the daily profit plan playlist. Images are the notes and screenshots to go along with the lessons. Enjoy. All right, so copy that. And copy that. Copy that. Copy that. Okay, so if you're in my Telegram image, just click on it. There are the notes. There are the notes. There are the notes. There are the notes. And summary. So I'll share my Telegram right here. If you're not a follower, all are welcome. Okay, and if you would like to join my daily sessions, I'll share a link for that as well. I'm live weekdays at 9 a.m. Eastern time. So daily profit plan, weekdays, 9 a.m. Eastern time. There's a link to join. Cool. All right. So that was a fun little segment today. We'll do a little top down, see what else is going on. So markets down, S&P down 0.39%. Futures went from positive 0.3, positive 0.4, flipped pretty hard, now down 0.4. NASDAQ flat today. Again, almost to all-time highs in the NASDAQ, not quite there. Let's see what MAGS did today. MAG 7 did poke an all-time high, but faded. Go back to the Qs. The Dow did poke an all-time high, but faded. Okay, this is kind of another one. Looking at, this type of structure, like, are we getting a rising wedge in the Dow? It's very possible. I mean, these are some pretty critical patterns that we need to watch. If the Dow breaks this low, that would be DIA breaking the low around 449. If we break the 449 low, I mean, at the very least, we could come back to, I would say, probably this low where it all started. At the very least, if we have some dynamic support, then you're looking to maybe establish some dips in here. Again, I look at the strategy like this, like waterfall income. I'm just trying to stay out of the way. Give ourselves some room. Do I think we're falling all the way back to April lows? I don't think that we are. But I also don't want to call the bottom. I don't want to call the bottom right here. So if I'm going to take that trade and I'm going to essentially like trade something, defined risk options, I want a low risk, high reward trade to see if we get back to these highs. Okay. Let me go to the Russell. Russell also poked some fresh highs. We're not that far away from all-time highs on the Russell. So despite the little indecision, Russell is still looking pretty good. We have a nice little trade running on Russell right now. IWM for waterfall income. Right now it's up about 224 bucks. So on the three spreads we have, we're up about 28% combined. One is up 39%, one is up 31%, one is up 16%. They're out a little bit farther. If we get these up into I would say if each one collectively is over 50%, or the positions as a whole, if I'm at a 50+% target, I'm probably going to look to protect it. Okay. What is this guy? This was filled for a 405 debit ITR. Oh, this is a pending order. Okay. Let's see if this is going to fill. This is a pinch point that filled. I was looking for this trade yesterday. ITRI, that was a pinch point trade. I need to add that to the tracker. I think it's already been set up as pending. Yep. So we set that up. Trade number 49, ITRI, pending at 405 debit. It got filled. So I'm going to put in the pending close at 5.50. Okay. We talked about that in class. So that one's open and active. All right, what else is happening here? So Russell's still making its way up. All-time highs are, chart alarm set at 245. We go into the VIX. I mean, on the daily time frame, we're still not seeing like a big scary VIX. Bear markets, we usually see like 20 to 40. That's a pretty healthy bear market. We are still just in this like volatility suppressed VIX right now. It had some runs from 14 to 16, 14 to 18, 14 to 19. That's it. Like it cracked 21 time. So these last couple of breaches, I sold some premium. I'm going to continue to do that. We go into the high, like we literally are 19 or 20 plus. I'm probably taking a stab at some premium on SPY, QQQ, SPX, XSP. I like that waterfall strategy. Okay, I do have something to show. We'll talk about this. If anybody would like to join me tomorrow at 12 noon Eastern time, I'm going to be live for a waterfall income webinar. That'll be in my Telegram channel. You can join me live. All are welcome. I'm trying to think here. Let's go option Omega. And I'll go waterfall income here. Okay. So this one I thought was really interesting. I ran this test this week. This trade, now full disclosure, this trade would require potentially up to like $30,000 of capital to take. But $30,000 maximum risk that generates over 100 grand is still a pretty good return. Now, it's not crazy compounding. You've had some drawdowns. We had bear markets with a 20% pullback in 15 and 16 with a range. We had a pullback, obviously, in 2018-19 with some of the broadening patterns we saw in the markets. We survived COVID quickly because of the time horizon. This is a 90-day expiration. We did have a 9-month bear market in 2022. So obviously, I was trading this strategy pretty aggressive, and we got stuck in a 9-month like lull essentially. But we traded our way out of it. We came out ahead. We're at some highs. Now I want to do one more thing. If I update this test, I'm just going to go after let's go 80% take profit. I feel like we're in enough profit on these trades to let these things go nearly to expiration. I'm just curious what they look like. Obviously, if I'm doing it on the SPY, I'm trying to avoid assignment. I could take I could take all these trades on SPX or all these trades on XSP, so there's no assignment risk. So we can discuss this more in detail on Monday for my master classes that I have. We're doing a live trading session at 11:30 on Monday. We're doing a master class at 1 o'clock on Monday. Another master class Tuesday at 1 p.m. But we're going to do a webinar tomorrow at noon. Okay, so this one might take a second to run. I was hoping it would just it would have all the data handy, but what I'm going to do is just go to a slightly higher take profit. I would imagine what this is going to do is increase the average days in the trade, so the average holding period is going to be longer. It might decrease the win percentage a little bit, but going out 90 days shouldn't be that big of a deal. Granted, a 9-month bear market like we saw in 2022, we're probably not going to see a lot of wins there. But a lot of these like dips and rallies are such short-lived dips and rallies. I mean, we're seeing literally like 45 to 60-day dips and the market comes out of it and goes to all-time highs. So anyway, point is I'll let this run, see if we can get this updated here in the next 15, 20 minutes and just get a number for fun. Okay, so VIX hasn't really done anything to scare the pants off investors yet. I keep talking about this vol suppression arena. I mean, there's a lot of funds out there that just sell vol. They sell vol, they sell vol, they sell vol. Anytime that vol spikes above like 19 to 20, usually that vol suppression breaks or the vol suppression stops. It's been relentless this year that we had this little tiny breach of 20 and then right back down to the lows. We had this little tiny breach of 21, right back down to the lows. This little run up to the 16s, 17s, right back down to the lows. You know, it's very aggressive this year. And that's why the market's been so resilient. So is it going to continue that way, or are we going to have some more spikes up into the high teens or 20s? We'll find out. If that rising wedge pattern breaks, don't be surprised if we get a little bit of a jump up in the VIX. Would it last super long? Probably not. I would imagine like a 30 to 50 day cycle, maybe 30 to 45 day cycle. Let's see here. SVXY, nothing. Dollar really didn't do much. Dollar just totally sideways. I'm just kind of warning traders like dollar currency wise, if you're trading FX, this is just a big choppy zone. I wouldn't be surprised to see some price manipulation if price comes down to the lows, tags the lows, and then goes back up. That's one way for price action to play out on the dollar index, or price just simply comes back up and breaks and goes back up to equal highs or equal highs. I think the dollar still has a little bit of a squeeze in it before it turns over into a bigger bear slide. I think the market squeezes up first and then turns over a little bit. So I'm looking for the dollar to still either test and fake out at the low, and that is a good buying opportunity. If you're buying the dollar down here, it is a super tight risk for a trade that can go right back up to the highs. That type of stop loss compared to that type of reward is, probably 3 to 1, I would guess. You can obviously get in more precise, but I would say you probably have all of 2 to 1, if not 3 to 1 on that trade. That's not too bad. Oil at 62. I've got some futures trades on. As long as the oil doesn't break 50, I'm okay with some profit. Natural gas, UNG off the lows. I need to sell some calls. I got a diagonal spread on UNG. I'm actually going to look at that either today or next week. Gold, another all-time high. Ooh, baby. Gold doesn't give a crap. Gold's going up. So I'm hoping that those of you that are long gold, I've been talking about it for the last 3 years. So it's still been a good trade. Despite months of consolidation, we're finally starting to show signs of appreciating once again. I don't like buying gold with these highs. I just don't. I think that if you're in gold, you've had plenty of time to get in gold. Would I chase it at these highs? Not particularly. Can it go higher? Of course. But this, to me, runs its course and probably hits a breaking point where we hit, a top that comes back maybe 15 to 20%. This 200 moving average is going to get hit eventually. The last time we had a run, it took 600 bars to hit it. So we could keep running for a while, but I would say percentage-wise, we're probably not going to get 20 to 25 to 30% higher than this 200 moving average. So right now at this high, we are about 13% higher than the 200 moving average. Okay, right here, when we hit this high, it was sitting around 22%. So I don't think we're going to stretch too much higher. 20% typically seems to be like where the market, it's like the elasticity kind of stops there. We get about 20% higher and then it just consolidates. Maybe it pulls back. We do have a really high bar count. So I think this next run up that we see could be really profitable. It really could be. We could enjoy a ridiculous run on gold up to the high 3,000s, maybe even tapping 4,000 plus. But I would be protecting profit because we're probably going to have a correction coming sooner than later. Okay. Silver also, hopefully breaking out above 41.50. I'd like to see this thing back above 42. Spot price all-time highs back into the 48, 49, $50 zone. Bitcoin finding some dynamic support around this 144. Potentially some price manipulation, but if we stay off these lows, something like this, okay, I don't think we should really see Bitcoin breaking below the 200 moving average. That would be a bit of a concern. If gold is up and Bitcoin's not, if gold is up and the equities market is down and Bitcoin is down, Well, clearly Bitcoin is more aligned with equities than it is in gold. So it's not the true alternative that everyone wants it to be if it's down along with equities. But equities are at all-time highs and Bitcoin has pulled back about 13%. So there's definitely been a difference. Okay. If silver clears, then 76. Woo! I mean, you're talking all-time highs clearing to 76. It's wishful thinking, man. I'd be stoked at like 48 to $50 spot price in silver. I've been in silver since like $16, I think. If I go to SLV, I got into silver hard in 2020 and hard in 2022. So, COVID was a ridiculous buy. I bought like $14, $15 gold back during COVID. And once we had this pullback, I was leveling in quite aggressively between the 20s and 15s. So I've been holding a silver for a while as like one of my favorite technical trades. This is my measure move. So, if we go all the way up here, measure this and measure this, that to me is like pretty fair. So wave 1, 2, 3. I think this is still in a wave 3. So this is 1, 2. This is still 3. A pullback is fine, but continuation to finish, I think we're up there. And let me use a fib here for a second. Let's go low to high. So low to high. I mean, that's a 618. There's a 618. We're hitting it. I mean, we're there. Like we hit this level. If we pull back on silver, great. I'm still buying a dip and maybe all the way up to 50s. But all-time high seems like a pretty good price. We're not there yet. So pullbacks and dips would be great. We pull back into some support levels. Silver still looks good. Finish that all-time high run. This is SLV at 44. That's the equivalent of roughly $48, $49 on XAG. So I think that's a pretty good looking trade. IBIT spot price correlated to Bitcoin. MicroStrategy at 334. We're right below the 200 moving average, or I should say we're right at it. So I think if anybody's really stoked about MicroStrategy, then you want to see price staying above this 200 moving average and trying to turn the corner. You probably see Bitcoin do the same thing. I would expect some volatility ahead. I have a trade running on Bitcoin right now that's max risk of like 330, but max profit like 1170. So hopefully we get back above like 390 to $400 by the end of the year, especially if Bitcoin has a rally. Coinbase, big gap lower, pretty sideways. I'm going to stay out of this for right now. I would like to sell some premium. In fact, you know what? UNH, we're at 315. I think I'm going to probably look to go bull put spread pretty wide. Let me see what I can get here on UNH. I might go out for a leap and just do a wide spread. Let me see. How much does this cost me? Let's take a look here. UNH. Right now, my exposure, I have some ratio spreads in this one. UNH. So I've got a ratio spread that is up about $60. Profit is up to $600. I'm going to try to see if I can get something going here. So let's go out to next June. And for some reason, like before the midterm stuff, I'd like to see, pre-summer push March, April, May, June, or April, May, June, July. Like that's a pretty healthy summer window to see some upward mobility in the markets. So going out to like June, July should be pretty good. I'm going to go into June and see what I can get for like the 200. Should be pretty decent. If I went like a 200 by 195, I mean, that's $334. Okay. So that's not a bad trade. 200 is well below current price. We're putting in a bottom here. I mean, that's back to COVID lows. I mean, I kind of love that trade. Probability of profit is 93%. Chance of assignment's only about 6%. If I can get $3 plus in the trade, I think I'm going to take it. So this would be income wise for my margin accounts. So these should be filled. Now, I'm also wondering, what do I do? Do I get if this goes defensive and goes up, I could probably do a synthetic here. Let me see what this is, but it's going to cost me. Let me do something creative. So I like this trade for my margin accounts. It only cost me about $2,000 in buying power. So let me see if I can I'm going to try for $4 in this thing. It's late in the day, but let's see what we can get. So I'm going to try UNH, a 200 by 195. Not filling. I'm going to try 10-cent increments here, 390. Hopefully I can get 350 or better. I think that's a decent income trade if I get it. 380. $370 is right below the mid price. Let's go 365. $360. Hopefully 350 or better. If I don't get 350, I'll probably just revisit this trade next week. 355, survey says. Come on. Darn it. $345, $340. I guess I'll settle for $325. Hopefully. Wow. 325. If I don't get filled, I'm going to revisit this trade next week. Crud. Okay. No love there. 320. Wow. All right. That's a 190. Let me try the 205. Nope. I go 210, 200. Nice. I mean, similar, about a 7% chance of assignment. I don't mind owning the shares. Wow, that's so far. That's so different though. $3 with $1,000 profit trap. We'll see. This one is cancel. Okay, so try this again. So $3. Nope. All right, never mind. I'm going to cancel the trade. I'll come back and revisit that one next week. Floyd, what you got going on there? Tax Cuts and Jobs Act 2017 exploded debt issuance. Yeah, we've been at the front of the curve since Yellen, for sure. We're still operating on the same game, short end of the curve. I mean, not a lot of people know this, but do you want to know what the Fed is servicing its debt at right now? Like 3.3%. Who right now can service debt at 3.3%? Freaking nobody. Nobody can. The Fed can. So it's like businesses, the world, like what are they going to refinance at? Not at 3.3%. So I don't know. It's an interesting game that the market's got going on right now. So maybe next weekend UNH will look a little bit tighter to these lows, like the 230 or 220 zone. See if this low's safe. But I like the idea of if I'm going to own shares, like give me COVID lows. If we come back down, give me COVID lows. So I'll play around with the numbers next week, but I'm going to get this on all my margin accounts. And I consider doing this on IRA accounts as well, but I would just do a wider spread. So I could sell, let's say the 200, maybe go 30, 40 wide. Or let me see what this looks like if I do. I don't really want to buy it here, but if I buy the 310, sell the 310, it only cost me $8. Like it cost me $8 to be synthetically long. But a margin account, this only ties up $5,000. A ratio spread only ties up like $2,000. But I get basically dollar for dollar appreciation. So if this thing goes up, let's say that we go to 342, we go to 374. Well, I mean, that's 100 shares at $30. That's 100 shares at, 50, $60. That's going to make me a lot more profit than my fixed, income on a ratio spread. But it's, the balance is one's a little bit more buying power reduction. It's certainly cheaper than buying shares outright. That's what's nice about synthetic. 2 yield spikes, all correlations break. I know, but I'm telling you, man, you don't think they're watching that stuff? I don't think yields are going to break. Okay, if we have like a Liz Truss UK moment like we had back in September 2022 or 2023, the Fed stepping in. Like everything. The example is literally this year, Liberation Day. Right after Liberation Day, it was all hands on deck. Trump and the Fed, like you could see the backstop was in. The bond market flinched and it made the whole world react differently, mainly the US. So I don't see the 2 year, just going haywire. It's like I think it is in the best interest of the global economy to not break anything bond wise, not break anything yield wise. So we'll have to see. That's why I think the steadiness of the Fed going out 25 basis points, just be consistent. It sucks to have it be so transparent, but it's also better to have that stability and that peace of mind that like the Fed's not going to do anything wild and crazy. If the market is stalling, that's okay. But the question is like, is the market slowing into a recession? I've said this a lot this year. I think that the market could very easily see a Wall Street recession with a Main Street recession with a Wall Street hitting all-time highs. I think you'd have another like K-shaped experience where Wall Street's making all-time highs, the stock market goes nothing but up, and Main Street's left with no jobs, no hiring, no firings, but no hiring, no growth, stagflation, and that's the difference between investing and day-to-day life living paycheck to paycheck. That could be the US in the next, 1 or 2 years. Like it's not going to be fun, but investing in a market that is designed to go higher with the biggest companies in the world, market cap is super concentrated, it can still go higher, right? Are you going to close your Nvidia short on your Condor position? Which trade, Patrick? Which trade? The one that I took for pinch point? The one I took for newsbreakers? I don't think it's in profit yet. Newsbreakers is down $30. Pinch point's down $50. Double up is down 33. Like I'm not going to close them. This one's out a little bit further. So I got another couple weeks on this one. This one's out to the end of the year. I've got time. So I don't need to manage those right now. Yeah, I know, but it's been scary for the entire year, man. I mean, this market does such a good job of climbing the wall of worry. Look, here, I'll give you an example. This is why, look, if you're a trader, you got to be a glass half full trader and you can't be worried. You have to almost be ready and willing to embrace the downside in order to make more money later, right? I mean, like seriously, what is the worst thing that can happen in these markets? There's no reason to say like, oh, this market's always going to go higher. Well, it should go higher, and technically speaking, we should not break this support. Okay, this is the trend that I see, right? And if you want to take a channel line here and draw it from the top, I would say we're nearing what looks to be channel resistance. Is this spot on? I don't think so. I mean, maybe the market finds a way to go higher. But if we go channel top and we come back into the midpoint again, this is also a support level right in the middle of the channel. This is a huge support level on the outer part of the channel. Okay. So to me, unless this whole global economy is going to roll over and do something terrible, this market's going to find a way to probably make higher lows. And it might go from this high back down to this low, and then we go to this high and back down to this low. And maybe this thing just continues on with higher highs and higher lows to keep up with the debasing of the fiat currencies, to keep up with the pace of inflation. So the way I look at the market is I'm cautious. I'm not bearish. I think we have to be dry powder, willing to buy dips, willing to participate, willing to have strategies that give us a wide margin for error. And that's what I'm doing. I mean, one of my favorite strategies is, and I share this in the masterclass for waterfall income, is if every week I started trading, if every week I could trade and I could go out about 10 to 15% every week. So when the week started, I can go out about 15%. Week starts here, go 15%. Week starts here, 15%. Actually, 15%. Week starts here, 15%, 15%, 15%, 15%. Right. And I just keep doing this. I keep like every week I can take this trade. If that's all I did, it's pretty steady income. We've had a couple of losses at like the tops when the market rolls over. But if you're out, 90 days or 120 days, you've actually survived a lot of those peaks and valleys. You survived a lot of those troughs. But it's not perfect. You're going to take some heat there and you'll lose a couple times. But when you have like literally 50 to 100 plus trades in a row that are winning, I'm not that worried about what the market does. You know, I mean, what's gonna piss off every investor this year is if we hit a top and we roll over and we finish negative for the year. That's the only thing that's gonna make everyone bad, right? If everyone's gonna be upset this year, it's because the market rolls over and now we're negative for the year. But if we just hang out up here at 7% or 10% and the market can just kind of stay here, people will still be fine, right? Portfolios are at highs. We're having a 20+% year the last 2 years. Markets still producing positive gains. Stock market's still good enough, right? But you mess with people's housing prices and you mess with people's portfolios, then people get mad. So it is in the stock market's best interest, the world economy's best interest to keep the party going. And there's a lot of stuff that would have to happen to break it. So I am definitely a believer that this market is way more bullish and way more biased than anyone gives it credit for. And it can certainly run way higher to the upside than people think. This market has been so concerned with a recession for like 3 straight years. 2022 felt like a recession because everything was down. Bonds were down, equities were down, and then they came out in Q4, and we haven't looked back since. We had a flinch this year with a 20% pullback. Other than that, just volatility. You know, so you got to be a glass half full trader, or else this market will drive you crazy. You get a bunch of gray hair, and you'll stress yourself out, and you'll miss out. I can't believe I talked to people that haven't been in the market since 2009. That's what's crazy to me. You're an active investor, and all of a sudden 2008 comes and it busts you up, and you're like, I'm never going to trade again. I mean, that's ludicrous to think how much wealth has been generated since the great financial crisis, and you're not participating. Right? I mean, look at this thing. We are talking about a run of 800+%. Right? 8 times your money. I don't care if you're down 50% of your wealth at the worst of the worst in the great financial crisis. Obviously, you can't predict the future, and emotions have a lot to do with this. But, just over a decade later, you're up 8 times. How painful it might have been in the short term, you're up 8 times that by just participating. Okay? I think we hit 10,000 spot SPX before we hit 0. I mean, so like all the perma bears out there, that's what they want. They want 0. They want this whole global reckoning and fourth turning, and okay. But when does it happen? I don't know. How does it happen? I don't know. What's the black swan event? I don't know. All I can do is manage risk. Okay. All right. Market is closed. We close at 64.82. I would like to double check on our trades for Monday because the deltas should look pretty good. Let's go to Monday, the 8th. My sell level at 65.30. There's a 95% chance of that trade making money. My sell level at 50. There is a 98% chance of that making money. So yeah, I'm liking that a lot, actually. Okay, so we should have had another winner today. We should have had 2 winners on the broke wing butterflies today for daily profit play. This one is a full winner for $100. So I think I marked that in the tracker already. Yep. So we had one for $90 today out of the max 100, and then one for the full credit. It would have expired at 0 today. So we keep the full dollar credit. So that's $100 a contract. And then I have 2 more for Monday. I did add a third one today. I just got less credit. I didn't make it an official group trade, but I did get into a 25 by 30 by 45 broken wing butterfly for 50 cents. I've got another one pending at $1. I don't think it's going to get filled. It's such a low delta. I'm just going to grab the other $50. So hopefully that gives me 3 winners for Monday. Each one delta wise, probably in the 90+% likelihood of winning. So about a 94% chance of profit and a 98% chance of profit. So those looking pretty good. Yeah, but it's still a 64.82, Janelle. It's not, I mean, if it popped up to like 64.90, 6,500, and all of a sudden that high from today is reachable. I mean, this high for next week, I would hope it's difficult to get on a Monday, right? I mean, the market's going to have to do something pretty unusual. We're likely going to see a plus minus on Monday of probably, 20 to 22 points. I hope the market doesn't go from 80 to freaking highs again. That'd be a 50-point move on a Monday. I don't think that's going to be the play. Hopefully Monday is just a range day. Market's just getting started. More volatility on Wednesday, Thursday with the inflation data. Okay, that's interesting, Floyd. 9,500 SPX would equal the 1929 bubble percent move in 2009. Crazy. Okay, any other charts? Any other questions? Currency strength today. Do we have any wild and crazy volatility? Kinda. We had a pretty big move on the dollar today, pretty big move on the CAD today. Did the CAD make a big old whiff? Jobs report was bad on CAD. We're up to some fresh highs again on Euro CAD. So that hopefully helped I've got an Aussie CAD long running. It's looking much better. I've got like 4 positions on this Aussie CAD going up towards the highs around 93.50. CAD Swiss, however, kiss my grits. This thing just can't catch a break, but I'll ride it out a little bit longer. Euro CAD is up to some fresh highs. Pound CAD is back to some fresh highs. New Zealand CAD looking a little bit better. I did get filled at a pullback at 80.90. So I'm long. New Zealand CAD, I've been long since this 30% zone. So I went 30 and 50, and I'm going 70. Those are my pullback zones, and I'm trying to go swing. So this low to high, pullback to symmetry. Hopefully that's the play. Okay, dollar CAD, they're both weak today, but I'm curious what this looks like. That's on the right-hand side of the trend line. I don't know. I mean, I just don't like this area. It can go up, it can go down. I'd rather buy it much lower. We're at the halfway point. This is just a big multi-year range. So I would prefer, and I talked about this in a couple of trades for currencies. I mean, if you buy it here, you got to be willing to buy it lower, in my opinion. You have area 1, area 2. I think that holds and we hit highs again. But if we participated here, at least we have a chance to go up and revisit, that 4,500 zone. Okay. All right. What else? Dollar Swiss, dollar yen. Yen in general is going to be an interesting trade. I think yen pairs, maybe Japanese yen futures. I'm just not ready to jump into it yet. I don't have enough contract time on Japanese yen. If we pull back into this area, I'm going long Japanese yen futures as far out as I can. Or I might just buy more shares of FXY. I do like this trade. I do have those are my exposures. I had some good profits on futures, the Japanese yen futures early this year when we had this run. So this run here ended up making me about I think I made like $600 per account. So it was worth like $3,000 or $4,000. And now I'm just waiting. So if I get another opportunity, I'll go long. I think that works out pretty nicely. FXY, I own the shares of the Japanese yen. So if it gets stronger, this pays out really well. It's not negative swap. That's another reason I would opt to trade that. It's so difficult in the currency world if you're paying negative swap. So the one thing I think makes the Japanese yen interesting over the next 12 months is if the Japanese bank, so BOJ, if they're on the curve to raise rates, if they keep raising rates while every central bank is cutting rates, that does take away this power of the carry trade. That usually equates to much higher volatility and possibly a risk-off move. So if this gets stronger, that doesn't look good for equities. That would be a monster deleveraging, similar to what we saw back in 2022. So it's so difficult to nail the Japanese yen. But it is. I mean, everyone calls like natural gas the widowmaker. I call the Japanese yen the widowmaker. I mean, it is the type of currency pair that if you're right, you can make a landslide of profits. If you're wrong, it will make you wish you never trade. This is the type of currency that does not technically behave. When it moves, it is fundamentally driven, and it usually goes thousands and thousands of pips without pulling back. So trade what you see, in my opinion, on the Japanese yen. That's the way you stay out of trouble. All right. Lululemon, let me take a look and we'll go. Lulu at 167. I do have a couple trades running. I think they're way down to the low 100s. Let me check. Lulu is, let's see, there's Intel at 22 to January. Lulu at 160 by 155. Ooh, I'm taking out a little heat on this one. I do have a January expiration. It's a ratio spread, so it looks something like this. Okay. if I zoom in, so right now we're trading around 160 and change. I have a peak at 155. So it's certainly in the cards that I could see this thing, going down and maybe getting a signed Lululemon. Maybe. Okay. I'm hoping that it's gonna stop. Right. Like we're talking about 155. I mean, I could see this thing coming back down to like COVID lows. But if we have a exhaustion gap and this thing tries to at least catch a bottom, and we work our way back into this gap or this inefficiency, or we hit even symmetry, high low, lower high, lower low. If we hit symmetry, let's work our way back higher and turn that ratio spread into a winner. So I think I took that trade for a couple of bucks. It is trading for $2.10. So it's a trade. I mean, if I looked at Lululemon from scratch right now, I would just go lower and I would do a ratio spread and probably go to like the 120 handle. To go to like 130 or go to 135, 125 and set up a ratio spread. I still like the trade. Probability of profit is pretty high getting out of the way. It's just, the stock's been terrible. So from high to low, it's down about 67%. Fundamentally speaking, I don't know if we need, if we need wealthy yoga people to be buying some more athleisure, but fundamentally, I mean, it checks some good boxes. Below estimated value, earnings forecast to grow. Earnings are growing. Good value. Price to earnings isn't obnoxious right now. Price to earnings 13.6. Fair value 345 is trading at 167. So I'm hoping that fair value wise, like the market is able to correct this little oversold move. So I've given it time. I have until January. If I'm assigned, I'll repair it. Okay, I'll repair it, which means I'll take the assignment and then I will add covered calls and I'll just calculate my break even and I'll make, hopefully $500,000. I'm not going to sit here and hold it forever. I mean, if I own it at whatever the strikes are, I've got a 160 by 155. So I'd own it at like 148. So 155 minus 5 minus 2.10. I'd own it at 147.90. So the first thing I'd probably do on assignment is probably sell like a 147.50 or 150 call, try to grab $2, $3, $4, $5 and flip it for repair. If I do that, I don't lose. Instead of losing money on the ratio spread, I make, a couple $100. If I get a better, run out of it, maybe I flip it for like $10 a share. So it depends on how good the premiums are in this thing on covered calls. If I go out, let's say 30 to 40 days, and at the money covered call is anywhere between $8 to $10. That's not a bad repair. I could do an at the money at my break even and probably make close to $700 to $1,000, hopefully. So, got it. Okay, let's see what happens. Happy Friday, everybody. Trade's looking good for next week. We'll come in and do this all again on Monday. Daily profit play. We got some broke wings up here. I've got 4 running. It's up to 1, 2, 3, 350 a credit. Should be a total of 3, 4, 450 of profit remaining. And that'll pair nicely with the $200 we made today. So, all right. Have a great Friday. Thanks for being with me all week. We'll be back at it again Monday at 9 a.m. Eastern time for Daily Profit Plan for Macro Monday. And let's just have another good week. All right. Thanks. And